Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 7th of February. Starting off with the FTSE 100, which is still in this range between around 7,600, 7,690. In fact, we've had a go at trying to break through the top, but haven't managed it so far. RSI is interesting here because we've had a bounce off the neutral 50 level and we're in the upper 50s, which is normally the right zone for a move to the upside. So we assume that this is a mid-move consolidation ahead of a move up to 7,800 and the top of that August rising trend channel. The other positive is the way that we look for support towards the 50-day line, but we're too strong to touch it. So finding support above a rising 50-day line does tend to be a continuation and a bullish signal as well. So let's see if the FTSE can step up to the plate. Onto the DAX, and here it's been all about trying to break the 17,000 level, which as we speak has just about been done, up sort of the fifth time lucky, something like that. Here we've got a rising trend channel from October, and it looks like we've got a sort of sideways shuffle above old resistance, which is nice. The old resistance being around 16,800, and above that we're looking for this market to head up as high as 17,900 by the end of next month. On the downside, the worst at the moment is the 50-day line and the floor of the channel, 16,600, but the DAX looking increasingly better, if that makes any sense. Moving along to the Dow, which had a bit of a rug pull earlier in the week, but still above 38,000, and that old resistance becoming new support. Also got the floor of that rising trend channel from October in place. That's currently now up to 38,200 really, so pretty impressive. And all of this points to us heading towards the 40,000 level as soon as the end of next month, something which seems amazing, but at the moment the market on track for something like that. Worst case at the moment, I suppose, would be a test of the 50-day line, 37,250, but we are still within that very steep rising trend channel, which continues to deliver. Moving on to Bitcoin, and here still at the dance either side of the 50-day moving average. It's been, feels like it's been going on for weeks, but in fact it's only maybe 10 days or so. Here the view is that the glass here is technically half full rather than half empty, because we've had two bounces off neutral RSI 50, and we are obviously trading around a rising 50-day moving average within a rising trend channel from back in August, if I haven't deleted the floor of the channel there. Here we've got that uptrend line that's running through 40,000 at the moment, so above that looking for a break of recent resistance of 43,700 and then a retest of 49,000 hopefully later this month. For the end of next month, looking for the top of that rising trend channel as high as 51,000. That would be the near-term target, but looking quite chipper there on Bitcoin while we're above the 40,000 level. Onto gold, and here it's been frustrating, but the dance here also either side of the 50-day line, that's at 2045 now. Above that we're looking for 2100 sometime later this month, and ideally by the end of next month as high as the top of the rising trend channel from March up to 2180. On the downside, the worst that is expected are maybe brief probes below $2,000, but the actual 200-day line there now close to 1990, so we're hoping that will hold. RSI is just bouncing off neutral 50 as well, so hopefully we head up towards 2100 from here. Moving on to the stocks, and as suggested, it looks as though CleanTech Lithium is having a bit of a revival. We were hot on the move there with a break of that resistance line there from November around the 14 pence level, and so far made good progress to 18. The key here now is breaking that December resistance line, the red one there at around 19 and a quarter. Above that, then we can fill the gap up to 25 pence from November, hopefully as soon as the end of this month. Feeling good about the revival here while we're above 16 pence, the initial February resistance. Moving on to a stock which is gapped up today and has also hit one of the targets, the initial target there, 27 pence, and it looks like it's quite keen on hitting the second target there, 34 pence, the upper parallel of that rising trend channel from November. Upside valid here at Deltic while we're above the January resistance at 28, so above 28 looking for 24, and probably looking for much more, but we'll save that for another day. Obviously the old July peak at 40 pence, an obvious place for this situation, or this stock to go to. especially after two unfilled gaps to the upside that we've had in the last month. So that does suggest that 40 pence is pretty much nailed on while we're above 28. Moving on to one of the stocks of the last few weeks, where it seems people are putting one and one together and coming up with more than two. We have Emmerson here. We were looking for initially a target there around 2.6 pence, which has been delivered. That was near the 200-day moving average. We had an unfilled gap to the upside. It was a bear trap gap reversal, which started the rally. Initial target 2.6, and then the next target up to 3.6 pence, the top of that July gap for the shares. After that, well, we'll have to see, but it looks very encouraging at the moment while we're above 2.6. Moving along to a stock which doesn't get much coverage, which is GRC, and here looks like a classic broadening triangle base. Strong recovery through the 50-day moving average there at around 4.6 pence, and above that we're looking for the top of the triangle there at 8.6 pence as soon as the end of this month, or even sooner. Great move there for those shares, and I suppose that gap higher that we had, bear trap gap reversal there at the beginning of January, was the early bird signal that something positive was going on. Interesting situation at Hercules, where there's finally been a turnaround after the rather horrible price action for the company a year ago. Above the 200-day line, 29 pence, have been looking for 40 pence. And I suppose after that, it would be the bottom of the gap from last February at 51 pence as the next target. But the real sizzle here, the way we've pushed back above the 200-day line at 29 pence for the first time in nearly a year. Moving on to the talk of the day, the stock of the day, I suppose, as well, which is Helium 1. Here you can see that we had our initial target there around 2.9 pence at the top of the gap, which was great, but for some reason we weren't able to go any higher. We should have, I suppose, have gone up towards the second gap there, around 5.5 pence, but obviously the placing means that it's not to be. The question now is, will the shares be able to hold above that 50-day line now at 1.1 pence? The bottom of the gap there around 1.4 pence, so that may be initial support today, and then the second support there around 1.1 pence. We really need to break back above today's high around the 2 pence level on an end of day close basis to open up 3 to 3.5 once more. On to Premier African, where it looks as though everyone and their mothers claiming the credit for the revival here. We were looking for a turnaround basically once the shares hit that 50-day line at 0.23, and the initial target 0.28 at that resistance line there from June, and now 0.4, the obvious target, which is the top of that triangle from November. We're lucky we'll get up to the 200-day line at 0.47 by the end of this month, and that would be the best case scenario. Upside valid while we hold above the 50-day line. Moving on to another stock which used to be very much in vogue and in focus, Pantheon Resources. Obviously, the rug was pulled last spring, but the shares keep on hitting that target line, the red one there at 29 pence. Above that, we're looking for 35 pence over the next week or two, backed by the way that there's been very decent support above a rising 50-day line and a double rebound there off neutral 50 in the RSI window. So hopefully 34, 35 pence nailed on, and then maybe 40 pence over the next course of March, etc., etc. On to prospects, where I still see people willing the shares to go higher. The issue here is that the 200-day line there at 6.5 pence is providing resistance. We really need to get back above that. We haven't been above the 200-day line properly since back in April. Above 6.6, though, we have the chance of hitting the top of that broadening triangle from July as high as 8 pence by the end of next month. Probably at the moment you could say that any dips towards the 50-day line around 5.6 pence would be a potential bottom fishing opportunity. On to Redx, which seems to have gained lots of favour today. Already hit the top of that triangle there from back in September at 31 pence. Above that, we're looking for a March resistance line projection at 41 pence by the end of this month. Upside valid while we're above the recent resistance there around 26 pence, but that seems relatively obvious after the bear trap gap reversal. On to another stock which has hit our targets, Synergia. In fact, I think initially we're looking for 0.11, then 0.15, and finally we're looking for 0.2 0.21, which hopefully we'll get sometime later this month. Obviously, that would retest the spike that we had in February last year. Not much to say more than that, apart from we'd like to stay above 0.16, the old target, and also notice the way that the 50 and 200-day lines are now both rising into a golden cross, which hopefully will happen by the end of this month. Another stock which has performed and hit its target is Strategic Minerals. In fact, it's right on that target there. We were looking for basically 0.25 once we got above 0.17, and that's happened. The next level, though, would be an end-of-day close above 0.25, leading to 0.35, which is a March 2023 resistance line projection. And feeling bullish while we're on the right side of the old August peak there at 0.22. On to the last two. First one relatively obscure, which is Xeros. And here, our initial target here around 4.1 pence, which hopefully we hit quite soon. We've got the 50 and 200-day lines now starting to rise. Above that, we're looking for a better target, which would be, if I can reveal it, up towards 5.5 3/4 hopefully by the end of next month. More confident about this once we break that November resistance at 3.8 on an end-of-day close basis, but the bullish setup here valid while we're above 3.4 January resistance. Finishing off with Zytronic, and here you can see that we gapped down rather painfully. It looks like we've overstretched on the downside, and at least while we have that uptrend line there from last month at 61 looking for the top of that triangle there at 78 as soon as the end of this month or even sooner. Probably could get even more upside, i.e. filling the gap and then heading up towards the 200-day line sometime in March. That's it for me today. More updates tomorrow.